All right, everyone, and we're back. This is Kal coming to you. And today, I have a very special video. It will be a two-part video. But today is about the secret but not so secret organizations that control finances, economics, and institutions across the world, starting out as the FATF, the BIS, the G20, the IMF, and the OCDEC. So we're going to start like this. So start the video. I'm going to explain it a little bit and then connect it how it all goes back to crypto. So let's get into it. The first group we're going to talk about is the FATF, called the Financial Action Task Force. The Financial Action Task Force, as known as the French name Groupe Fractionnaire, is an intergovernment organization funded in 1989 as an initiative of the G7 to develop policies to combat money laundering and to maintain certain interests. In 2001, the mandate was to expand to terrorism financing, and we all know about that. The objectives of the FATF are to set standards and promote efficient implementation of legal, regulatory, and operational measures for combating money laundering, terrorist financing, and other related threats to the integrity of international financial systems. The FATF was formed in 1989 by G7, a summit in Paris to combat, of course, money laundering and terrorist effort actions. Now, interestingly enough, one of the reasons why the FTF is so important, this is their website. As you can see, these are the countries that they work with at the moment: Argentina, Australia, Austria, Belgium, Brazil, Canada, China, Denmark, Finland, France, Germany, Greece, Hong Kong, Iceland, India, Ireland, Israel, Italy, Japan, Korea, Luxembourg, Malaysia, Mexico, Netherlands, New Zealand, Norway, Paraguay, oh, I said that so wrong, Russian, Saudi Arabia, Singapore, South Africa, Spain, Sweden, Switzerland, Turkey, United Kingdoms, and last but not least, the United States. And interestingly enough, going from there, right, the FTX, founded by the G7 nations, aims to combat money laundering. And expanded mandate now includes cryptocurrency due to the potential to disrupt the financial system. Despite decades of attempts, and it's recommended to have limited impact on illicit financial activities, the FTF's final recommendations in 2021 categorized certain crypto activities as high risk, potentially erasing financial privacy if implemented. The travel rules timeline varies by country. That's right. This organization, the FATF, has it so certain countries have certain rules in dealing with crypto. With Nabon's website providing a list of compliance statuses, the United States influence on the FATF's regulations is evident, as seen with the U.S. Bank Secrecy Act influence on travel rule origins. The travel rules expansion parallels the U.S. proposal aiming to reduce transaction threshold and expand reporting. This trend raises concerns about the future extension reporting on crypto transactions. Countries like Kuwait and Pakistan opt for crypto bans due to compliance challenges, which means these countries banned crypto all the way out so they would not have to deal with the privacy compliance challenges of the FTF, which are controlled at the moment by the United States, highlighting resource limitations. The U.S.'s involvement in FTF may have geopolitical motives, aligning allies or regulations. Profit potential drives countries to comply rather than ban crypto, even though the FTS regulation may favor large corporations and challenge privacy. This means that these rules are in line and they help the corporations, and for peer-to-peer decentralized crypto, They provide a way or a key in stopping the privacy and the peer-to-peer workings of crypto. The long-term effects on the crypto market are uncertain, but short-term benefits, institutional investments are possible. While compliance is stringent, the industry seeks decentralized solutions to navigate regulations, and interestingly, compliant companies like Nabana and Chain Analysis, which advise governments to have pro-crypto inclinations. The FTS focus on privacy raises concerns about financial freedom. However, the crypto industry is responding to privacy-enhancing technologies like Ethereum zero knowledge proof, and Bitcoin's top uproot. In conclusion, these crypto markets face challenges and uncertainties due to the FTS regulations, but the industry is adapting strategies seeking decentralized solutions and enhancing privacies to address these changes. So to go over this again for the FTF, they were basically created by the G20, and we're going to go over who the G7, which has turned into the G20, is to combat money laundering. And now they're the ones that can create the compliances for crypto going there forward. Now we're going to talk about the G20. The G20, once called the G7, is an intergovernmental forum comprising 19 countries in the European nation. It works to address major issues related to global economy, such as international financial stability, climate control mitigation. Remember, the World Economic Trade Forum, sustainable development, and climate change. Oh, and look at here, sustainable development. Look at the key words, people. This is why I put these videos in conclusion with each other to give you a bigger part of the puzzle. The G20 is composed of the world's most largest economical financial ministries, including both industrial and developing nations. It accounts for around 80% of the gross world product, 75% of the international trade, and 2/3 of the global population, and 60% of the world's land, right? The G20 was founded in 1999 in response to several world economic crises. At the time, they had the Asian economic crisis that they were combating. And since 2008, which was the housing market crash and loans and credit and banks, it has convened at least once a year with summits involving each member's head of government, state, finance, foreign minister, and other high-ranking officials. The EU, European nation, is represented by the European Commission and the European Central Bank. Other countries, international organizations, non-government organizations are involved to attend the summits, some permanently. In the 2009 summit, the G20 declared itself the primary venture for international economic and financial cooperation, right? The group status has risen during the subsequent decade, and it is recognized by analysts as exercising considerable global influence. It is also criticized for its limited membership, lack of enforced powers, and for alleged undermining existing international institutions. Now, here we go. I'm gonna read the first part of it because you're gonna see why it connects. The G20 is the latest of series post-World War II initiatives and international coordinations of economical policy, which include institutions such as the Bretton Woods Twins, the IMF, we're going to talk about them, the World Bank, and the now World Trade Organization. So what they're saying is these are some of the groups that were created after World War II to take affairs internationally into finance and therefore after. They were first known as the G7, but they've added 13 more countries. This is the G20 website, right? Right now, I think India is kind of I think they're in the forefront of leading. And these are the countries that are involved: Argentina, Australia, Brazil, Canada, China, France, Germany, India, Indonesia, Italy, Japan, Mexico, Korea, Russia, Saudi Arabia, South Africa, Turkey, the United Kingdom, and the United States and European nation. And these are the invitees: Bangladesh, English, Egypt, Netherlands, Nigeria, Oman, Singapore, Spain, UAE. And I'm sorry if I said this country. Please forgive me. Mauritius. Woo, I said that so wrong. Right? Again, from reading what we have, it says in addition to the regular international organizations, this is the UN, the IMF, the WHO, the World Health Organization, the WTO, the ILO, and the OECD. Now, mind you, these organizations run the world. Let's kind of click on all of them just to see, to show you how intricate this is. These are the people that run your money. These are the people that run economics and influence. The United Nations. We all know about the United Nations. The United Nations was first called the League of Nations before World War II. I think they ended around the 1930s, right around actually when World War II started, and then at the end of it, that's when they came up with the United Nations. The IMF, we will talk about them later. The World Bank. For those that don't know, the IMF and the World Bank are the group that give institutions and countries loans for sustainable development in different continents and areas of um, areas of produce and procedures. The World Health Organization, founded by the Bill Gates and Melinda Foundation and countless others. The World Trade Organization and the International Labor Organization. So I'm showing you the Financial Stability Board. So I'm showing you all of this to show you that our world, as much as they try to make it like we are against different countries, look at how many organizations that everybody is in. Again, I'm going to say them again. The United Nations, the International Monetary Fund, the World Bank, the World Health Organization, the World Trade Organization, and see, you have the FATF, you have the BIS, right? All of these organizations connect to each other, and they also connect to now BRICS. Let's take it to another one. Now you have the IMF. The International Monetary Fund is a major financial agency of the United Nations and an international financial institution headquarters in Washington, D.C. I'm going to say that again. The IMF is in Washington, D.C. I'm going to say this again. The IMF is in Washington, D.C., consisting of 190 countries. It stated the mission is working to foster global monetary cooperation, secure financial stability, facilitate international mission, is working to international trade and promote high employment and sustainable economic growth and reduce poverty around the world. Formed in 1944, right around the time World War II was happening, and started December 27th, 1945. I think that was right around the time World War II ended, at the Bretton Woods Conference, primarily by the ideas of Harry Dexter White and John McCartney Keyes. It came into formal existence in 1945 with 29 members, and the goal of reconstructing the International Monetary Fund. It plays a central role in managing balance and payments difficulties and international financial crises. Countries contribute funds to a pool through a quota system, from which countries experience balance of payment problems can borrow money. As of 2016, the fund has SDR $667 billion by the United States. The IMF is regarded as the global lender of last resort. Right? Now that's so interesting. It says, upon funding the IMF, its three primary functions is to oversee the fixed exchange rate agreements between countries, thus helping national governments manage their exchange rates and allow governments to prioritize their economical growth, and to provide short-term capital to aid balance of payments and prevent spread of international economic crisis, to help mend the pieces of international economics after the Great Depression and World War II, as well as provide capital investments for economical growth and projects such as infrastructure. This is the IMF website. All right. Things they're working on. IMF in Ukraine. Interesting. Now let's get down to the countries. as I always love to do, because I love to show you who may be involved. Now, there's a lot of countries here. I think they said as many as 130, 190, actually 190 if I remember right. Yeah, 190 countries. Now let's get to the BIS. The BIS is called the Bank for International Settlements. Is an international financial institution which is owned by members of central banks. I'm going to say that again. The BIS is an international financial institution which is owned by members of the central banks. Its primary goal is to foster international monetary financial cooperation while serving as a bank for central banks. The BIS carries its work out through meeting programs and through Basel process, hosting international growth, pursuing global financial stability, and facilitating the interest. It provides banking service, but only to central banks and other international organizations. The BIS is based in Basel, Switzerland, with representative offices in Hong Kong and Mexico City. Now we're going to get a little bit into the history of the BIS. The BIS was created by Montage Norman in context of the Young Plan, which was Young Plan was a program for settling Germany's World War I reparations. It was written in August 1929 and formally adopted in 1930. It was presented by a committee head by American industrialist O. Dean Young, founder and former of Radio Corporation, and the initiative of a group of American bankers. Now we're going to read this and let's see if you see any familiar names. Owen D. Young, J.P. Morgan Jr. I'm going to say it again. J.P. Morgan Jr. Thomas D. Lamont, S. Park Gilbert, and let's see a little bit of history on this. American banker, and Jackson Reynolds. Let's see, president of Morgan Stanley. All right, so with further elaboration in the spring of 1929, on your input from Shepard Morgan, Warrant Randolph Bergen, which was in the NATO, Stewart, who was a banking expert. He was the economical advisor to four presidents, Coolidge, Hoover, Roosevelt, and Eisenhower, Belgian official, and central banker Horace Schrubbs. Political positions within Herbert Hoover administration made it impossible for the United States Federal Reserve System officials to participate directly in that initiative. But the United States was still able to retain the roles of the BIS chairman and president held by private bankers with the Federal Reserve. I'll say that again, held by private bankers within the Federal Reserve during the bank's first half of decade of operation. The BIS's original role was to facilitate the reparations imposed by Germany from the Treaty of Versailles, right? For those that don't know, the Treaty of Versailles was the peace treaty signed after World War I. Basically, everybody signed that treaty after Hernando Fernandez was assassinated. Germany lost, and they would say that Germany would have to pay back all the countries they went to war with reparations, which led to the rising of Hitler and the Neo-German Party. They at the time felt very under pressure, disrespected, and we know that's how Hitler used propaganda and different things to build the Nazis, and the rest is history. After World War I, and to act as a trustee for German government international loan that was floated in 1930, the need to establish dedication institution for purpose was such as in 1929 by the Young Committee. So to put this into equation, these guys necessarily come up with the loans for central banks and other international organizations. Let's go on their website. And they were started by a whole bunch of banking officials. But the main thing is they were started by J.P. Morgan, which is therefore Chase, and are connected to the Federal Reserve System. This is a website. Let's see, Central Bank Hub. Let's see. These are some of the central banks. These central banks are across the world. Yes, across the world, all over the world. I can't even say all of them. But interestingly enough, I am just trying to show you how deep down the rabbit hole and how intricate things are. The last organization that we will talk about, and then you guys, and I know everybody's tired because I've just been running my mouth. In the next video, I'm actually going to get a chance to explain how this connects to crypto. All right. Now, in this part, I want to go over this for the G20. The influence of the G20 on cryptocurrency regulations, the G20 compromise of major economics holds significant sway over global financial policies. I want to say it again. The G20, which is comprised of the 20 countries that I read out, they basically sway global financial policies, right? As India holds, so to put it into this, during every region, the G20 picks out a different country to become president. At the current time, India holds the G20 presidency. That's why you saw India all over the G20 website. It's released a roadmap outlining plans to regulate cryptocurrencies. Their roadmap is emphasized to customer protection, anti-money laundering measures, financial stability, and technological innovation. India's stance aligns with the G20's goals of securing the financial system. India's roadmap includes steps like identifying regulatory challenges, enhancing oversight, promoting financial inclusion, sharing the best practices, and among members of countries. This aligns with the G20's aim to create an unidentified approach to crypto regulation. The impact of G20 leads regulations on crypto markets could be significant. Stricter regulations may increase compliant requirements for crypto-related businesses exchange, affecting access to cryptocurrencies and altering trading dynamics. This means that in the future, they may be able to block you having your crypto if it is on an exchange, and they may be able to limit what you can trade into liquidity pools for staking and yield farming in the future. Additionally, discussions on central banking digital currencies, CBDCs. I'm going to say it again, CBDCs. You're going to need this. This is on the test of life, people. CBDCs will be extremely important going forward in the future, and stablecoins could reshape the digital currency landscape. In summary, the G20's engagement with cryptocurrency regulations underscored by India's roadmap, reflecting evolving attitudes and actions of major economics. The outcome remains uncertain as the G20's influence on cryptocurrency can vary based on presidencies, geopolitical considerations, and priorities of the major members. The cryptocurrency market must navigate their intricate landscape as regulation takes shape. And for the last group we're going to talk about is the Organization for Economical Cooperation and Development. See, no, that's not the one. So this group is comprised of 38 members and countries, founded in 1961 to simulate economical progress and world trade. And it is a forum whose members countries describe themselves as a committee to democracy and the market economics, providing a platform to compare political experiences, seek answers to common problems, identify good practices, and coordinate domestic and international policies of its members. The majority of the OECD members are high-income economics ranked as very high in the Human Development Index and regarded as developing countries. The collective population is 1.38 billion. As of 2017, the OECD members countries collectively comprise of 62% of the GDP, which is 49 trillion, 42% of the global GDP, which is 54 trillion, at purchasing power parity. The OECD is officially the United Nations observer. I'm going to say this again. The OECD is officially a United States observer. And to break that down, the United States General Assembly has granted overseer status to international organizations, entities, and non-member states to enable participation in the work of the United States General Assembly. This means that they get special privileges that the United Nations give them. Sounds like they can be bipartisan if anything comes out corrupt. But that's just me. Again, this is for entertainment and research purposes. Take nothing I say serious. I'm not trying to get striked. I'm not trying to get flagged. I don't want no smoke. In April 1948, the Organization for European Economic Cooperation was, and so let's see, go from there. Yes, and these were the founding countries. I'm going to read them from the back. The United States, United Kingdom, Turkey, Switzerland, Sweden, Spain, Portugal, Norway, Netherlands, Lombards, Italy, Ireland, Iceland, Greece, West Germany, France, Denmark, Canada, Belgium, Austria. They're always the usual suspects. It says to achieve, and this is what their mandate is. I guess I could go over that. To achieve highest sustainable economic growth, employment, and a raw standard of living in member countries while maintaining financial stability. To contribute sound economical expansion in the member as well as non-member countries, and to contribute the expansion of world trade. Let's look at their website. And I am so sorry if this bores you guys. I am doing this. There's going to be a point, right? In this first video, just trying to explain these major organizations that seem to know about your banking, sustainable development, how they're funding policies and institutions, and how it compares to cryptos. And so, in order to do that, I have to go over this. So, I apologize if you fall asleep. But at the end, I'm going to link it all together. See, these are the countries. And then here is about better policies for better life. Together, we can create better policies for better life, right? It says our goal is to shape policies that foster prosperity, equality, opportunity, and well-being for all. We draw on 60 years of experience and insights to better prepare the world of tomorrow. Now, I'm going to link it all together. That's going to be the first part of the video. And now you know what these organizations are. So, in conclusion, the Bank for International Settlements, BIS, the Financial Stability Board, SFB, the International Monetary Fund, and the Financial Action Task Force and the Organization for Economic Cooperations and Development are all significant international organizations that play various roles in the context of cryptocurrency and their regulation. Example, the BIS is often referred to as the Bank for Central Banks due to its role in promoting international monetary and financial cooperation. It's published reports highlighting the risks and potential benefits of cryptocurrency blockchain technology. The BIS provides a platform for central banks to discuss and collaborate cryptocurrency related issues, such as CBDCs and cross border payments. I'm going to say that again. The BIS controls, collaborates, and discusses issues such as CBDCs and cross border payments. In the next video, you will see how important that is. And I'm actually going to link it to the crypto that you need to pay attention to, which I yell out the same ones all the time, unless people want to get to, some different ones, which I don't mind. I stay humble. The FSB is an international body that monitors, makes recommendations about global financial system, and publish reports and recommendations on how to regulate, supervise, and rapidly evolving fintech landscape, including cryptocurrencies. The FIB's recommendation aim to ensure financial stability, protect customers in context of emerging technologies and digital financial services. What a mouthful. Next is the IMF. The IMF is an international financial organization that promotes global monetary cooperation, exchange rate stability, and balanced economical growth. The IMF has studied the potential impact of cryptocurrencies on monetary policy, financial stability, and global economics. I said that again. It has provided guidance to members countries on how to approach regulatory challenges posed by cryptocurrencies while considering their potential benefits. Now we have the FATF, Financial Action Task Force. The Financial Action Task Force is an intergovernmental organization focused on combating money laundering, again, money laundering, terrorist financing, and other illicit financial activities. The FATF has issued guidelines and recommendations for countries to regulate and supervise cryptocurrency businesses to prevent misuses for illegal purposes. Its travel rule mandates virtual assistant server providers to collect and share customer information for certain cryptocurrency transactions. Ladies and gentlemen, because of the FATF, the IMF, and the BIS, and the Federal Reserve, was the creation of KYC, which is Know Your Customer. Organization for Economical Cooperation and Development. The OECD is an international organization that promotes policies to improve economic, social well-being of people around the world. The OECD has explored implications of cryptocurrency for taxation and customer protection and financial regulation. It has provided reports and guidelines to help member countries address challenges. Overall, these international organizations play a crucial role in reshaping global regulatory landscape for cryptocurrencies. They provide research, recommendations, guidance to member countries, fostering collaboration, coordinations, and addressing the challenges. Opportunities presented by growing adoption of cryptocurrencies and blockchain technology. And now, you know about the FATF, right? The G20, the IMF, the BIS, and the OECD. Ladies and gentlemen, guys and goddesses, and therefore after, these are the people that control the world: produce, electricity, stocks, land, ownership, businesses, banks. These are the people that come up with the jurisdiction internationally and will provide the guideline, the structures, and therefore the rules that help push cryptocurrency forward or limit its perspective for their greater good. These are my opinions. I say this in no disrespect. It comes with a lot of research, but also understanding the landscape of what's going on. It is important that you may not necessarily know these people, but you understand how intricate this web is of money, debt, credit, the corporation of the United States, and the United Nations, and all these other organizations that are controlling our world. Going forward, if you are not aware, even if you own crypto, if you don't know the regulations and the rules, you can be sideswiped. Again, my name is Kal. If you want crypto advisory, financial advisory, anything of that sort, I sell a PowerPoint, ebook for cryptocurrency, and an PowerPoint for gold, silver, buying, development, and therefore after. My information will be in the description. This is part one of the organizations that run the world financially. And this is me logging out. Have a good one.